Hey guys, welcome back to the Richard Fernando Investing channel. Thank you to everyone who has commented lately, who has subscribed. We're hitting goals a lot quicker than I expected, so thank you very much for that. If you're Australian and looking to get into the US market, I've left a referral link for me below to help you get into that without paying brokerage, which is great. But without further ado, September. Stocks I'm watching for September 2020, US stocks. There's a bit of a pattern here, so we'll jump straight in. It's impossible to talk about September and this month coming up without mentioning all the SPACs that are just really heating up absolutely everywhere right now. I'm of the stance that I like SPACs for the reason that they give retail investors more of a level playing field with the big guys, with all the big investment banks and funds and whatnot. And I think that for that reason, it kind of democratizes or just allows free access to everyone. And so I really appreciate, and I can see why they're getting so much attention. And I was starting to think maybe they are in a bubble. I was reading so many comments saying that, and I was trying to kind of comprehend that as well. And I was seeing a few key examples, a few key stocks that made me think that. But I recently noticed that the NYSE, at least, is pushing really hard to kind of not stamp SPACs out, but make them less relevant by introducing their own kind of new direct listing format, which I believe is going to try and give retail investors more equitable kind of access, but I could be wrong there. But what I do see is that the SPACs are a threat to a lot of the traditional kind of companies and big banks that would kind of benefit from that IPO process. And I don't know, I was on the fence, and then I saw the Xpeng Motors IPO. I was watching it the whole day. It opened at like 1 p.m. But by the time retail investors could buy, the price was already $23, and I don't know. You can understand why retail investors like you and I are so interested in the SPAC space, because it does give us what feels like a fairer access to new companies trying to go public. I mean, of course, from the public company's point of view, going through the traditional process does have its pros as well. It kind of takes a bit of risk off them. They are a bit less involved in that whole kind of roadshow process, I'd assume. But regardless, the SPACs that I'm watching, probably for the rest of the year, I am watching GMHI just because LiDAR technology and kind of autonomous vehicle capability in future, I think, is a huge space. It's probably up there with perhaps owning Aptiv in a completely different way, but still, it's not kind of the whole car, but it's a part of what's going on. At least that's my interpretation. Apart from that, there are so many. I'll try and just think of a couple of highlights. HCAC is one of my favorites, Canoo. Why do I like them out of all kind of the SPACs and EV companies? Because there are so many. Well, I can appreciate the fact that they are working with Hyundai. We say Hyundai in Australia, I don't know how you pronounce it in the US. But they are working with those guys. And without getting into too much detail about the deals and like what they're developing together, what I like the most is that they have brought a completely revolutionary idea to electronic vehicles and future mobility. They're quite a few years off serious revenues, which is, hopefully gets kind of priced in and makes it a bit cheaper. But what I like is that they're working on this kind of platform, this skateboard architecture, which means that there's just endless possibilities for what their vehicles can be used for. And it feels like they have found a way to make it really stock standard. So all they have to do is focus on perfecting the skateboard that they do, and then companies from there can kind of contract them or buy them and then just add what they need on top. That's what it is in my perspective. And so the reason, if you watch all their YouTube content, especially the Jay Leno stuff, it's really hard to kind of take a positive stance when you hear some of the employees that work for them talk. They're quite kind of robotic, unfortunately, especially in the Jay Leno one. They seem to not have much personality and don't understand his kind of humor or like back and forth, which is a bit frustrating because it kind of gives you this culty feel of the company. But what I do like is that they are at least trying to think of how millennials will use cars in the future. I personally do not care if I ever own a car or not. So that's why this model and this subscription service for cars and mobility is really, really interesting. I think it's worth at least checking it out. A final reason that I think you should definitely at least watch HCAC, I'm not saying buy, by the way, none of this is financial advice or anything along those lines, but why I think you should watch it as well, that a lot of people aren't talking about, is the fact that this platform, this skateboard architecture, I just kept thinking of what this can lend itself to. And honestly, I conceptualize that it has a lot of business applications. Imagine owning a big warehouse, imagine being, perhaps not Amazon because they have their own EV kind of like ties and connections, but another big company that needs warehousing, say like Kraft Heinz or something. The idea of having a literal like EV that's perfectly flat and you can just add whatever modules you need on top of it for your purpose, I think that's perfect. I think it has so many different use cases and it doesn't really take much creativity to think of how they would go about using it. So say Kraft Heinz, for example, employs them and wants to work with their skateboard. The fact that it is a flat skateboard, you can just add module after module, whatever suits your business application. And I think that this is something that no one seems to be talking about, but it is such an obvious possibility for that tech. You know, it takes away kind of the traditional notion of what a car in terms of shape has to be, apart from the fact that the bottom's flat. They can do anything on top that suits the scenario, and I think that's really crucial. All right, so stock number 2, even though I've mentioned a couple, the second one that I'll probably talk about a bit more is Xpeng Motors, as I've mentioned once, just in terms of the IPO gripes that I had. It will not surprise me if it crashes a bit into like the mid-teens, high teens in this coming week or two, just because I think that's where it should lie in terms of valuation. I'm not going to get into the numbers here because that's the fun stuff that you guys will probably go and do from here. But for it to be more relative to NIO and a few other EV companies' valuations, I think that, yeah, it does have a bit of downside from where it's opened at to retail investors. So I'll definitely be watching it though, because I can appreciate the fact they have great backing in terms of Xiaomi, Alibaba and more. Of course, Xiaomi's been on a tear lately, so I'll be watching that because it's been fantastic this past month. But yes, Xpeng, I like that they've built their own factory. I like that they have their own kind of autonomous driving tech, although there are questions about whether there was something untoward there with regards to Tesla and perhaps appropriating some of their tech. At least Tesla was asking to see their source code, something along those lines. So I'll definitely keep an eye on that as well. But it is almost, if I do end up buying, I'm kind of unlikely at this point, but if I do ever end up buying, one way I will justify that on a personal level is the fact that the Chinese electric vehicle market is still so much bigger than anywhere else in the world. And so the race to kind of scramble and become the leader or the top 3 or 4 in China itself is more important to me than expansion to the US in this scenario. So yeah, definitely worth checking out. They have 2 kind of main models, but the P7 model is their flagship, I would say. It's more of a sedan style. So in that respect, NIO hasn't really been in that space in the past. So in the near future though, there will be kind of closer competition between the two. Xpeng also does have an SUV. Sales numbers, again, aren't near or aren't too close to NIO's. Historically, I think they've, at this point, either sold or delivered about 6,000 to 7,000 less cars. And yeah, there's a few other questions here and there, but that's all in the numbers and stuff. I definitely think it is worth at least adding to your watch list, just having a look, see how it trades, and plus just the general excitement to see how things kind of behave right after IPO. Whether it is kind of in its projected general price range for the next few years, or if it's wildly off its real value right now and will kind of correct a ridiculous amount, or in either direction. You really never know in the first few weeks or first few days after the initial public offering. All right, so naturally also going to watch Shell. I've got a mate that's really heavily invested in Shell, so just naturally watching them going into the next few months. And definitely Pershing Square, their PSTH.U or PSTH, I think it will be quite soon. That's the SPAC run by Bill Ackman that I did a small video on. Definitely also need to keep an eye on them, just because in the first week of September, I believe, we'll be seeing some action in terms of an acquisition target, that sort of thing. So definitely worth watching that. Before I forget, HCAC is expected for the 4th quarter of this year, so keep that in mind. But yeah, definitely watching, because everyone has been speculating about who the target will be. It's the largest SPAC ever. So naturally the idea is it's going to be a big company as well, just going off the criteria that Bill Ackman has said. It's going to be something with an interesting business model, or at least one that can have projected but predictable cash flows. Doesn't have to be profitable right now, anything like that. And he's got a pool of about 150 companies he was looking at last time he spoke on TV. Check out my video specifically on Pershing Square and on BigCommerce. It's definitely worth a watch, just because this could be the biggest, well, it will be the biggest SPAC in terms of size this year. So yeah, worth checking out just to see what the hell he does. Side note as well, the structure of the SPAC means that he doesn't really get much of a reward, or as big of a reward, until there's a decent appreciation in that share price once they merge and all that sort of stuff. At least that's my understanding of the fine print. So really interesting. He's definitely got a huge vested interest in if this goes well or not, so I'm sure he'll be shopping it around as much as he can, trying to find the perfect unicorn to meet his unicorn of a SPAC. Yeah, add it to your watch list. Alright, so next up, to try and avoid companies that I have mentioned in the past, like BigCommerce, which I will be watching. I've got a position started in the low 80s, so will I sell soon? I don't think so. I'm not in a big rush to sell anything right now. I'm not really seeing much of a point in selling. Might lock in a few profits here and there, like I have lately on Plug Power, just because I was too overexposed. But again, without going into detail, because I have mentioned them in another video, I will be watching Xiaomi very closely. It looks like people are finally giving it kind of the respect it deserves, or the recognition it deserves for how big of a company it is. They had a really good kind of mid-year or second quarter earnings. They released a video on their Facebook, which also just had one of their managers kind of talk through the results. But what I like about what they're doing there is they're still managing to grow in key areas. They're still expanding to Western Europe. And I mean, I went through and created a Crunchbase Pro account and had a look at all the ventures and stuff and startups that they've invested in. And of course, Xpeng Motors is one of those. And so I really look with quite excitement when I see Xpeng IPO and it blasting off from the start. I mean, that's great news for me. If it doesn't get to a cheap enough valuation that I personally want to buy, I'm not too stressed that it's going well, because I know that Xiaomi has that vested interest there as well. So definitely watching Big C and Xiaomi again. Alright, so in all honesty, those stocks that I've already mentioned are probably the ones that I am personally most likely to dip my toe in and buy. Again, I can't stress enough how much reading into the HCAC Canoo story has really interested me, in terms of they, in my personal opinion, are the first company to revolutionize transport in their thought process. So very high risk, high reward. We'll be keeping a close eye on it. And again, the others that I've mentioned as well, even Xpeng and Neo and that sort of thing, I don't see the interest in them dying out too soon. So all of those that I've mentioned worth watching. But the final one I did want to talk about, just in general, the big FAANG stocks, but mainly Facebook, potentially Twitter, along those lines, Google as well. At least in Australia, Google is having really serious issues and serious dramas with just, I guess, abiding with general media laws, and there's a push for kind of reformation in terms of how they're governed, so that they give a bit more preference to the larger media corporations in terms of, I guess, more access to being at the top of search, that sort of thing. There's a lot more to it. I'm probably explaining it really badly, and I have been corrected on it a couple of times. But the reason that I mentioned this with Google, and I mean, I can't even begin to talk about Facebook in terms of a lot of the stuff they're involved in, even Apple with their App Store dramas. I'm really interested to see what precedent is set, especially in the United States, but here as well, with how they govern these big tech companies, just with the issues they're having right now in terms of antitrust laws, in terms of like fake news advertising, that sort of stuff. I've been watching a lot of the depositions. I've been interested. I know AOC, Ocasio-Cortez, was grilling Zuckerberg, and it did not look good. It did not look good from Zuckerberg's point of view in terms of the way he communicated back in a lot of those issues. I'm not taking a side. I will take a slight side in the fact that I think big tech, social platforms especially, do need at least a base level of regulation because of the huge sway they can have in especially political issues. I'm not caring if it's for the left or the right or anything along those lines. I just think that there should be at least a protection from unfair kind of targeting and use of data and that sort of thing. There's a lot of interesting info out there about that. But that's my main thing, my main issue, or my main, I guess, cause for watching a lot of these big stocks. It's the fact that, especially post-pandemic, that sort of stuff, there has been a lot more kind of scrutiny placed on these companies because they've been thriving. They thrived when a lot of people were suffering a great deal. And of course, that's in huge part just to the fact that they're online businesses and their business models are quite resilient to this sort of thing. In some cases, like Amazon, even more kind of open and willing to kind of benefit from huge issues like what we've been through, in Facebook as well, of course, online only stuff. But yes, I think it's worth keeping a close eye on just the developments. If you're not aware of the App Store one, the Apple App Store one, it's the fact that Epic Games and the guys from Fortnite are essentially really going at them for the massive cut they take from every kind of dollar you earn. Their main argument is, hey, when you've got a PC, you don't pay Microsoft 30% for every application you install. And the counter argument is, well, you know, Apple hosts their apps and everything while Microsoft isn't doing that. But then the other counter argument to that is, yes, but when you have an iPhone or an Android, you don't have another choice. You don't have anywhere else to go to get apps and that sort of thing. Regardless, just the main focus being, how are they going to regulate these big companies? What precedent does that set for the stock, and what reaction will investors have? Because naturally this could completely change the paradigm in terms of how they operate, what they can and can't do, whether they need to be broken up. I think it's a huge issue in terms of the stock, of course, because so much could change just with little kind of regulatory changes here and there and rulings. So watch it all, keep a close eye on it, as I've said. And if you guys are interested, leave a comment, or maybe I'll just do it without a comment being left. But I'll put in the description a paper I did that was specifically on Facebook and Facebook Libra and the regulation and kind of, I guess, research surrounding just how ethical, or not ethical, but I guess the ramifications of and the reactions to the proposal of having Facebook Libra, which is one completely separate issue to the fact that now they're actually being kind of attacked on their core business. So a lot to watch. If they get cheap enough for me, I'll be jumping back in. I was in Facebook for quite a while, not too long ago. But thank you very much for watching. If you didn't really like the, you know, how many I mentioned, and you would rather I just mention 3 and no others and just kind of go into detail, you know, let me know. I'll happily take a bit of feedback, that sort of stuff. And apologies before I go as well for some people that I think I might have accidentally had your comments slip through the cracks, because I try and reply to everyone. I know a couple people have also been requesting specific advice, and again, I can't do that, unfortunately. And I've also had a couple people asking me to look at their specific stock, and again, just with uni right now and all that sort of stuff, it's been a bit difficult to kind of veer off my own path at this moment, but hopefully in future I'll be able to. But again, yeah, please subscribe, and thanks for watching.